Now let's talk about Genco, symbol GNK. They report earnings today. The company coming out and producing earnings of $1.03. This compares to a loss of 9 cents this quarter in the previous year. Now we've got an expert with us. We've got John Wobensmith. He is the Chief Financial Officer of this hauler of grain, iron ore, and just about every other dry bulk item. John, welcome to Bloomberg.
Thank you, Pimm.
So tell me, what about the results? Not so bad compared to last year. Last year, the world was falling off the cliff.
It was. Things have gotten dramatically better, and we're now seeing actually record numbers coming out of China on the steel production side, which has directly affected the iron ore and the coal trades.
What about the tax that the Australian government wants to levy on some of those mining companies? Are you hearing any feedback from that?
No, I think that's going to be more at a company level. I don't think it's going to reflect the volume of goods moved.
All right. What about the movement of goods into China, dry bulk? As I said, iron ore, coal, grains. Are you seeing increased volumes? Are they building inventories?
Yeah, actually, we're seeing increased volumes, but the inventory numbers, particularly on the iron ore side, are actually at some pretty modest levels right now. On the coal side, they're also modest. What's happened on the coal industry, which I think has surprised a lot of people, is because of the drought in the southeast part of the country, they're not able to use the hydroelectric plants, so they're having to rely more on the coal-fired plants, and it's really been a big increase in the volumes of coal going into China.
All right, tell me about Genco right now. I mean, you've got, what, about 67, almost 70% of the fleet is already chartered out for the rest of the year?
That's right. We've seen some pretty strong rates over the last 2 to 3 months, and we've taken that opportunity to lock away our ships at a year or 2 years at a time.
What kind of rates are we talking about? Maybe 4,500 to 5,000 a day?
No, actually much better than that.
Okay,
I mean, we
good.
actually, our Supermax vessel, which is one of our medium-sized ships, we just put away for $22,500 for a year, which was a great rate.
Now, tell me about another company that you're involved in, and this has to do with Baltic Trading. This is BALT.
Right. This
just came public, and this is designed, well, you explain it, to take advantage of short-term moves in the Baltic Dry Index.
Yeah, it's actually geared to trade just in the spot market or to come very close to mirroring the Baltic Dry Index. And it's a company that's going to have little to no debt, and we're going to be paying out a dividend based on net income for the quarter.
And what's Genco's relationship in terms of ownership?
Well, the first thing is Genco injected $75 million into Baltic, and then Baltic raised another $210 million in IPO proceeds to buy 6 ships, 4 Supermax ships and 2 Capesize ships. And Genco will also be doing the management because Genco is a low-cost provider in the industry, so Baltic will be able to benefit from that.
And when you talked about the ships that you bought, do you have them all, they all operating on the seas right now?
We have 2 that we've taken delivery of. We're expecting 3 more before the middle of May, and then 1 is coming out of the yard as a new building in October of this year.
What about those new builds? We keep hearing about the order book and about how the order book is not going to turn out the way everyone thought because financing isn't there. What's the outlook?
No, I mean, the outlook is still the same. Last year we had almost half the fleet that was projected to deliver, not deliver. We're seeing the same pattern in the first quarter already of this year, and we're not seeing really the financing side from the commercial banks come back. So we expect, 45–50% of ships that were projected to be delivered this year not to hit the water.
So only half are really going to come out onto the seas?
That's what we think.
What about prices? Are we seeing any kind of firming in terms of actual prices for ships?
Yeah, a little bit. And when we just bought the Baltic ships about 2 months ago, we signed those contracts, and we've already seen those ships move up about 5 to 10% in price. So there is some firming. And
is there a range in terms of whether we're talking about the large carriers, small carriers, or is it just everything moving? No, I think everything is moving. Capesize, until really the last week, have seen a little bit of a slowdown, but now the Chinese are coming back into the market and buying iron ore from Brazil and Australia. And as I said, the coal and the grain trades for the Panamaxes and the Supermaxes has been really, really positive, very strong. Now, I'm sure you've been following what's happening in the Gulf of Mexico with the oil spill and BP. There have been some analysts talking about whether this is going to affect the shipping lanes. What have you heard? Right now, there is no effect. The Coast Guard, I think, are doing a good job to make sure the shipping lanes are open. BP is set up two hull washing stations at the base of the Mississippi if there is a problem. But so far, there hasn't been any issue. And what about congestion globally? We always look at those pictures in Singapore, those pictures in Australia. Yeah. Are we still seeing huge amounts of port congestion? Particularly in Brazil, in the iron ore ports, and definitely in Australia in the coal ports, and as well on the discharge side in China. The discharge side in China. And just a quick quickly, met coal, this is coal used to make steel.
Correct.
Is that still strong?
Very strong. Very strong.
Going into China?
Going into China and going into India.
Going into India as well.
Yeah.
All right, I want to thank you very much, John Wobensmith, coming to us, the Chief Financial Officer of Genco, also involved in Baltic Trading.